the good, the bad, and the ugly of GoFundMe's new giving fund. My name is Lori Styron. I'm the CEO and Executive Director of Charity Watch. And I'm here today to talk to you, to explain a little bit, describe how GoFundMe's new giving fund works. They just launched it this month, July of 2025. And essentially, if you're a charity, a 501c3 public charity, they've already basically created a profile for you, automatically pulling information from a public database that has all the charities in it. And they've created charity profiles. Charities have to log in and claim or create an account and claim their profile, and then they can add additional information to it. So all the charities are basically in there, is my understanding. Now, if you're a donor and you already have a GoFundMe account, most people are familiar with GoFundMe. It's a very quick and convenient crowdfunding website that allows you to kind of go in and very quickly find campaigns and also charities to make donations to. So a lot of people are familiar with it, and that familiarity will probably inspire a lot of people to want to use it as a tool, especially if they already have an account. It's very convenient. But there's a few very important things that you need to know about this tool. The GoFundMe Giving Fund is a donor advised fund. So it's not just a transaction where the money goes to GoFundMe and then they just swoosh it over to the charity. It actually goes into a donor advised fund, and there's special rules and tax implications to your money going into this type of giving tool. And you really need to know about it. It's very important, especially next year when the tax changes are implemented. So the first thing is this basically democratizes donor advised funds. There's other tools out there like PayPal's giving fund that does the same thing, because that's also a donor advised fund, or a DAF as people like to call it. In the past, it was mostly wealthy donors that used donor advised funds. They might have an account, retirement account through Fidelity, Schwab, Vanguard, or a community foundation, and then they would put money into their donor advised fund, take a tax deduction when they put the money in there, but then they could, wait many, many years, decades actually, in some cases, to decide which charities they want to distribute that money to. Now, this tool has been democratized, so it's not just wealthy people using it. It's anybody. It's anyone with a GoFundMe account. It's anyone who uses PayPal and distributes money or puts money into the PayPal Giving Fund. Here's the deal. Once you put money into these types of giving funds, these donor advised funds, first, it no longer belongs to you. You can recommend charities for them to distribute the money to, but legally, they don't actually have to take your recommendation. I know that sounds a little crazy, but this is important to understand. The year that you put the money in, if you itemize on your taxes, that's the year you can take the tax deduction. Now, GoFundMe, for its giving fund, has said that it's giving people 2 years to tell them to recommend charities that they want this money to be distributed to. So they're giving you a couple years, and there's some fine print that says if you don't pick a charity, basically, we'll kind of pick one for you. We're going to get those funds out. At Charity Watch, we actually agree with that approach. There's far too much money sitting in donor advised funds that is not making its way to charities that have boots on the ground programs that they're trying to operate. A lot of money, billions of dollars, get stuck in these donor advised funds and never distributed, and that really hurts the charities that desperately need this money to continue their work. So in theory, you legally, not an attorney, so I'm just giving you some general information here, but basically how DAFs work is once you transfer that money into a donor advised fund, you can recommend charities that you want that money to be distributed to, but legally that donor advised fund sponsor does not have to take your recommendation. In practice, they almost always take your recommendation, because if they didn't, people wouldn't use DAFs, right? If the sponsor just constantly disregarded your wishes for where you wanted the money to go, people would stop using them. So it's really rare that would happen, that they wouldn't take your recommendation, but you never know. We're living in very politically contentious and strange times, and you never know. If you lean very far right or far left and there's a charity that aligns with your values, you want to give it money, who knows, right? Sometimes they're there could be a corporate entity that runs this kind of fund, not just GoFundMe, but any entity, any DAF sponsor that decides, ooh, that's a really dicey mission that charity has. It's, it's either not politically correct or it's too far to the left or the right, and we don't want to, be involved in that transaction. You never know. So just be aware of that. If you want zero risk in this regard, you want zero risk about, having a say in where your donation goes, especially if you donate to some charities that may have some kind of, you know, contentious missions or programs, you might want to just skip these types of funds and donate directly to the charity. There's something else to know about the GoFundMe Giving Fund, this new fund. You have a choice about whether or not you want to allow GoFundMe to invest your donations once you put them in the fund, but before you recommend charities to distribute them to. So say you put $100 in there today. You can, if you itemize, you can take the tax deduction during this year. If you put it in there in 2025, that's when you can take your tax deduction. And then you have a couple years to decide which charities you want to receive that money. While it's sitting in there, say that you leave it in there for 23 months, while it's sitting in there, you can instruct GoFundMe to invest that for you. Now here's the thing, there's risk. They could invest that money and it could end up being worth $120, right? Or you could invest that money and it could lose $20 and only be worth $80. So when you go to distribute that money, whatever the value in the account is, pardon the train behind me, whatever the value in that account is, that's all you have to donate. You don't get to donate your original 100, right? If you're lucky and the investments work out well for you, you have 120 to donate instead of 100. But if you lose money, you only have 80 to donate. You can still take a deduction with the original amount you gave. So your tax deduction's not affected. It's just the amount available to go to the charity of your choice could be affected either very positively or very negatively or something in between. You can also opt out of this. So if you just don't want to take the risk of your donations being invested when you donate them, but before you distribute them, you can say, hey, GoFundMe, I don't want to take this risk. I know my money could grow, but I could also lose it, and I don't want to take the risk. I want that full $100 or whatever you put in there to be available for charities. So you can opt out. I already mentioned this, but I think I implied it at least. Once you put the money into the GoFundMe Giving Fund, it no longer belongs to you. It does not belong to you anymore. You can't say, oh, I put that money in there, especially if it was a lot. I put $1,000 in there when I was feeling particularly generous. Maybe I got a bonus at work. And then, oh no, 8 months pass, something bad happens in your family, or your car breaks down, you have a health issue. You can't get that money back. It doesn't belong to you anymore. So you can't think of it as like your own like little bank account or, your own little fund that belongs to you. And then say, ooh, I didn't, I realize I can't afford that. Now I'm going to take the money back. No, doesn't work like that. Once you donate the money into that fund, it does not belong to you anymore. You cannot take it out, even though it's sitting there. You must distribute it to an eligible 501c3 public charity at that point. I'm going to quickly talk about fees. Zero administrative fees, and I'm getting this information directly from GoFundMe. Zero administrative fees. They don't charge a fee to maintain your account per their website as of today, July 23rd, 2025. Payment processing fees, it's just the standard credit debit transaction fee of 2.2% plus 30 cents per contribution. If you contribute by card, the cost is deducted before you before funds enter your DAF. Not a GoFundMe markup, but this is for secure payment handling. We're all used to credit card fees, processing transaction fees, and these are pretty standard, the ones that GoFundMe is charging. Investment management fees. If you invest your balance of what you put in your GoFundMe Giving Fund, the chosen ETF or fund incurs a typical expense ratio reflecting regular operating costs. These are built into the fund's performance, not billed separately. GoFundMe does not collect extra fees on investment gains. So the conclusion here is that this is a very convenient giving tool. It sort of democratizes donor advised funds in ways. This tool used to be available mostly to wealthy people. Now anybody can use a DAF. Downside, a lot of money gets stuck in these funds and not distributed. So make sure that if you do put money in there, if you itemize, take your tax deduction. But don't just let it linger in there forever, you know. Hey, donate some to Charity Watch. We could really use your help. But certainly just whatever cause is really important to you. Find a good, efficient, responsible charity working in that cause. Don't let your DAF funds linger in there for a really long time. There's a lot of charities that really need those funds right now. So make sure you distribute them. And one final piece of advice, and I might make a separate video about this because not everyone may have made it past the 10-minute mark in this video. There's some tax changes coming next year that are really cool. So in the past, only taxpayers who itemize could deduct charitable contributions from their taxes. And that after 2017, only about 10% of filers itemize. Most of us take the standard deduction. And if you take the standard deduction, you're not allowed to deduct charitable contributions from your adjusted gross income. So starting in 2026, that's changing. The most recent bill that passed included provisions for people who take the standard deduction. According to this bill, starting in 2026, with that year's taxes, you're allowed to write off up to $1,000 worth against your income. Now, this isn't you get to write off $1,000 off of the taxes you owe, right? This is a deduction, right? That's important to understand. So if your adjusted gross income was $50,000 and you donate $1,000, your adjusted gross income would now be $49,000, and that's what you'd pay taxes on. So this is not a tax credit, this is a tax deduction. For people filing jointly, it's $2,000. Now, this is what is important to know, really important, and that's probably why I'm going to make a separate video. If you donate this money into a donor advised fund, those donations are not eligible for this deduction, okay? So you take the standard deduction, you're like, I can afford $500. Oh, I have a GoFundMe account. Let me put it in there and take a tax deduction. For this specific deduction I'm talking about, according to the bill, it can't go into a donor advised fund. It has to be direct contributions to charity. So be careful, like PayPal Giving Fund, GoFundMe Giving Fund. You know, these are donor advised funds. These are DAFs, and those are excluded from that deduction. So I'm really bracing myself for a lot of disappointed donors who are using these tools without realizing what they are and what their limitations are. So overall, this is a good thing, kind of democratizes this giving tool for regular old people to take advantage of. Make sure that you understand the rules and limitations. We do have an article on our website that explains more. I'm not going to drag this on any farther. It's a long video. Again, my name is Lori Steiren. I'm the CEO and Executive Director of Charity Watch, and I hope this information was helpful. Happy giving, everyone.